Hello, and thanks for your interest in this really important topic of improving your cash flow by renegotiating customer credit terms. What exactly do we mean when we talk about credit terms? Sometimes you provide goods and services, but you are willing to get paid at a later date. That means you've extended some credit. But this presents both challenges and risks for your business. The challenge is that you've already incurred costs in the production of your goods or services, the delivery, the marketing, the sales, and operating your business, but you've not yet seen any revenue from that transaction. That puts a lot of strain on your cash flow. Of course, the longer the credit terms, you'll find that there's an increased risk of non-payment. Simply put, the earlier you get paid, the better for your cash flow and the better for your business. When you enter into the transaction with your customer, the bargaining position might not be the same. Your customer might simply tell you, look, we pay 30 days, 60 days, 90 days after being invoiced. That's the industry standard. But generally, we find that there are ways to renegotiate or at least to improve the payment terms for your business and free up very valuable cash. Let's look at a couple of those ideas. The first is to offer some kind of incentive for early payment. This could be a discount, of course. It could be the bundling of your product or service with some additional product or service. It could be free delivery. But if your customer values this, they may be incentivized to pay you a little earlier. Sometimes customers don't adhere to the payment terms. They pay late. And one thing you can do is include some kind of penalty clause whereby they have to pay an additional amount, often expressed as a percentage of the total transaction value. The longer they are in default, the more they'll have to pay. You could also ask for a partial upfront payment. That could be a part of the purchase price or some kind of deposit. And even though that may be refundable, this puts valuable cash into your business early on. Some businesses consider invoice financing. This means approaching a third party and saying, please buy these unpaid invoices from us and assume the risk of non-payment. This is good for your business because you get an earlier influx of cash into your business and you eliminate the risk of non-payment. Of course, there are fees associated with this, but this can be a really good way to get cash into your business earlier. One thing that's really important is to ask for improved credit terms. Your customers are partners, or they should be partners. They want you to succeed. They want you to be in a position to continue servicing them. They don't want you to be under undue cash flow pressure. So at least go and ask the question. You might be surprised and find that they can reduce that 60-day term to 30 days or 30 days to 15 days. They want you to succeed. Good luck in improving cash flow and be ready to negotiate customer credit terms. Thanks for your time.